A very good morning to all my dear students. Good morning, all of you. So I hope you are excited for today's revisionary class. I welcome all of you for today's revisionary class for chapter number 4, that is share capital and debentures. So children, I hope you are studying well for your exams. They're just approaching, and the only, the motivational dose and the spirits to keep high is your hard work. So you have to be very consistent. Whatever you have studied so far, keep revising it. See, children, in law, the only thing is that you have to retain whatever you have learned plus your writing practice. The more and more you practice, see the descriptive questions that are given in the module itself, all the questions that you can find out on this ICAI website, the mock test papers, revision test papers, you should try solving them. But the only thing that I want to tell you is that first you should complete that chapter. See, for example, you have revised preliminary, you have revised incorporation, you have done prospectus till now for the revisionary batch, I'm telling. So you should look for these questions from these chapters. Don't try to pick up the question paper and try seeing the question which is over there, mostly dividend question, which is upfront. So you will definitely tend to get confused because you have not revised it. So it's very normal. जो डर आप कहते हो मतलब मैम I saw the paper and I got scared. So that happens because you have not yet revised. And when child you revise it and then you open the question papers from the mock test paper, automatically you start answering, you're able to understand. So that's why I request all the students, as and when you have finished a revisionary lecture, try solving the questions given at the back module as well, the mock test and revision test papers for that respective chapter. And try to do writing practice, which is very, very important. All right. With this motivational dose, which all my students know that hard work is the key to success. Without hard work, you cannot achieve anything. Whether you are in any field, whether you are doing, even the doctors, those who study hard, even the chartered accountants, everyone, every field, hard work is required. Some children say that, ma'am, those who are doing just BCom, MCom, they don't require that hard work. So every field requires a hard work. Even if you're in the marketing team, to survive in today's era, if you have seen how AI is moving so fast, they're trying to replace humans, but it can never happen because behind the AI factor is also humans. All right. So we are moving fast. We have to keep ourselves updated. So that's why hard work is required in every sphere. So remember that whatever you have learned, whatever you have revised, never demotivate yourself. Everybody is enjoying Diwali party. Oh my God, I'm locked in my room. I'm sitting, I'm studying. Be happy about that. Tomorrow you are only going to have that name prefix C in front of your name. So we have to study very hard for our exams and keep revising. It will definitely help you to clear your exams without any tension. So welcome all of you. Good morning. All those who have sent beautiful morning wishes. Sunil, Ayushi, Kushbu, Swati, Om Krishnam Gupta. Good morning, all of you, and all those children who were there, who are on the portal with us. Good morning to all of you, Pooja, and others also. Okay, so share capital and debentures. Children, you must have done prospectus by now. Good morning, Manish. So by now, you must have done prospectus. So prospectus is now further you're moving to the shares. You have learned how you have invited the public to take up shares in your company. And now you're talking about what is actually the shares, how the share capital is issued. So since it's a revisionary class, I would want to make it as interactive as possible so that you learn it. I am here to help you to revise all the sections. So section 43 till section 72, I'm going to cover with you in the 2 sessions. In today's section, we'll try to finish as much as possible, maximum till section 60, because debenture in itself is a huge section. So we'll be taking up section 61 onwards in the next class, that is day after tomorrow, same time, 11 to 1. All right. So now what is the kinds of share capital? Section 43 the chapter starts with the share capital. But if you'll refer to the module, let me open the module also for all of you, because children, module is the Bible for all of you. Each and every word from the ICAI module has to be read, which is very important. You should not skip a single line of what is written in your ICAI module. All right. So here it is in front of you. Let me just widen it for all of you. So fourth chapter, that is share capital and debentures, the chapter overview. I just gave you the overview. 43 to 70 will be dealing with the concept related to shares and 71 is for debentures. So shares, the finance is the lifeblood for running the affairs of the company. So we have raised a capital. We have understood how we went to the public by raising a prospectus, issuing a prospectus. We have invited them for the shares and debentures. Now the first definition starts over here is what is your share and what is a stock. So share is a share in the share capital. So it is the interest that you acquire, the rights that you get related to a share. So share is the smallest unit and stock is the consolidated share is known as stock. So this is the basic definition that you should know. It says stock in share includes stock. If the company has the fully paid up shares, it is merged into one fund that is called stock. So all the shares which are fully paid up, they are consolidated and put it up in one stock that is one fund that is a bundle of fully paid up shares is stock. However, share is the smallest unit. It is the interest that you acquire in a company. So here you can simply read this. It is the smallest unit. Ordinary shares will get you shareholders. Ordinary share, originally the shares are given and when the fully paid up shares are further converted to stock. Now let's start with the kinds of share capital, which my dear students have been doing since class 11, 12. They have been hearing about this word share capital. So section 43 gives you what kind of two share capital you have. One is equity share capital. Another is preference share capital. Now my question in the revisionary batch, the first question that I'm asking my class is, can a company issue preference share without having equity share capital? Can a company come up with the preference share capital without having equity shares? Tell me. Somebody saying no, somebody saying yes. Rishabh, why did you say yes? Others have, all of you have said no. So that is correct answer. Why? Because preference share capital, preference shareholders are those who get preference over equity shares. So how can it happen that the company is not having equity share, it is just having preference? And with over whom you're getting the preference? So it is always important that even in the study material, you'll read this slide. After section 43, this is given, that preference share capital cannot be company having only the preference, only you have equity share capital, then only you can have preference share capital. So now what is your equity share capital? Equity share capital are issued with two different kind of voting rights. One is your uniform voting rights. What is the another name given to the uniform voting rights? What do you call these equity shares? I give you a hint. It is a name related to your white color ice cream that you enjoy. What is the name given to the uniform voting rights? Equity shares, plain vanilla. Very good, Abhijit. Very good, Om Krishna, Mayushi. Excellent. So one is plain vanilla equity shares having the uniform rights, means one share having one right. Swati, nice, good, all of you. And another is differential voting rights, means different shares issued with different voting rights. If you remember the example of Tata Motors that we have done in CA Foundation Companies Act, you must have read that Tata Motors has issued differential voting rights where 10 for the 10 shares, one voting right was given, and but the dividend was additional dividend, 5% extra dividend is given to these kind of shares. So it is a differential voting rights. It can be different with respect to the dividend, or it can be different with respect to the voting rights or otherwise. So for example, 10 shares, if you take up 10 shares in the company, then only you'll get a single voting right. For uniform vanilla equity shares, one share, one voting. And for differential voting rights, you get one voting right is given behind, say, for example, 10 shares. But what is the benefit of DVRs? DVRs, you call it as DVRs. You get additional dividend because you're taking more risk, your more dividend is given. And what is your preference share capital, children? Preference share capital carries preferential rights. What are the two preferential rights? Preference shareholders get the preferential rights for what two things? Come on, answer. For the payment of dividend, ma'am, excellent, fixed rate of dividend, and the dividend is paid before paying to the equity shareholders. The dividend is given to the preference shareholders. And for the repayment of capital, whenever the company goes into winding up, preference shareholders are repaid their money first, and then the money is given back to the equity shares. Okay, so repayment of capital at the timing of winding up and the payment of dividend are the two preferential rights that are carried by the preference shareholders. Now let's move with the equity shares with differential rights. So section 43, equity share capital, preference share capital. Now we're going to understand what are DVRs, how the DVRs are issued. So before we move further, children, I want to tell you one very important thing of this chapter. Share capital and debentures is very, I would in fact say it is the easiest chapter. On the contrary, where students find it the most difficult, because here learning part is more, but when you divide it, like I have underlined few provisions for you in this presentation itself, just to explain you how you should make brief notes and how you should learn about it. So this chapter generally involves the limits. If you are redeeming preference shares, again a process. You're issuing sweat equity shares, again a process. You're issuing bonus shares, there is a process. You're issuing DVRs, is a process. So this chapter is like, a short story on the basis of shares, you can learn it. So DVRs issue kare, kya provisions? Sweat equity ke kya provisions? One by one, you have to keep remembering it and keep learning. So it's very easy if you know how you have to learn it. You should know the manner. You should frame out a manner for preparations also. Now, what are DVRs? We have understood what are DVRs. Now, second important thing which I want to ask you before moving further, we'll be talking about ordinary resolution, special resolution, SR pass karna hai, OR pass karna hai. But now, my dear students, you have went through the syllabus once. You have done all things. So when I do it for the first time, I try to show you from the MGT chapter where it is written what is OR, what is SR. But my students are doing revision. So why not ask them only? So quickly answer me. What do you mean by ordinary resolution and what do you mean by special resolution? So that whenever I talk about these words, you should be having a meaning in your hand. What do you understand by OR and what is SR? Preferential holders are also given the rights, Kavita. That's absolutely correct. But the only preference that they get is for the payment of dividend and for the repayment of capital. Votes in favor are more than the votes in against. Special resolution, Komal Tree, 3 times the votes. Very good. So ordinary business, when you do an ordinary routine nature of business, then you pass OR, that is ordinary resolution. And for the special and important business, okay, all right, those who don't know still, SR and OR, what is OR and SR? OR for the ordinary business, you pass ordinary resolution. Majority of the voting right, majority of the votes have to be there in your favor. So 50% of the voting rights have to be given in case of ordinary resolution. But in special resolution, since it is done for the very important matters are transacted, special business, we pass special resolution. Here, at least 75% of the shareholders have to give their consent. So ordinary resolution, at least 50% of the shareholders have to consent, and special resolution, since it is very important matters, 75% of the shareholders' consent is required. And all those who have written this answer, very nice. Ayushi, Swati, Komalpri, all of you, Kavita, Yamini. Nice. Okay. So now what are the conditions? So we will be dividing these conditions into different parts. First 3 conditions are talking about what is the kind of compliance that is required for the differential rights. So number 1, articles will authorize, then only. So there is a company XYZ Limited. Its article has not written anything about the differential voting rights. Can you issue DVRs if the articles are silent about it? There is no authorization given in the articles. Can XYZ Limited issue DVRs? No. Satya Gupta, very good. And Ayushi, all of you. So no is the correct answer. No, ma'am, we cannot issue because articles should allow you, authorize you, means articles में provision होना चाहिए that yes, you can issue the differential rights. Then this issue shall be authorized by the OR. OR has to be passed in the general meeting, and how this OR shall be passed through postal ballot. So you're not inviting the shareholders, even by post, they can send their resolutions, they can send their consent. And what is the total voting power given to the differential rights shareholders? It shall never be more than 74% of the total voting power at any. So whatever is the total voting power of the company, so 100 is the total voting power, so 74. So 74 will be the voting power of the differential voting rights. These are the 3 points related to compliance that you have to learn. AO shall authorize it, OR has to be passed, and it shall not be the total voting rights shall not be more than 70%. Now we have to understand the 3 next points related to the default. So the default should not have been made. So company should not have defaulted in filing financial statements and returns for 3 years. So in 2024, if XYZ Limited is issuing DVRs, and say, for example, in 2022, the company failed to file the financial statements, it has not filed it annually, then can the company issue? The answer is no, ma'am, because company has defaulted. So company should not have defaulted in filing financial statements in advance. If the company has defaulted in paying the dividend, then can it declare DVRs? Tell me. Company defaulted in declaring the dividends. Then can you pay? Yes, Abhijit, that's absolutely correct. So no, ma'am, we cannot pay if you have defaulted in declaring a dividend. So MCQs can come like this. Learning part to आपने कर ही लिया. Okay, हम learn करते तो we do it in a flow. That okay, fine, it has not defaulted in paying the dividend, it has not defaulted in filing the financial statements. So whenever you see an MCQ related to this, in your mind, you will revise whatever provisions you have read. Okay, now I will apply it. Don't quickly jump to the answers. And another hint for all the students who are appearing the exams, please read the MCQ twice, the question, frame the answer in your mind, and then read the options. The second thing that you get confused is when you start reading the options first and then you are applying your mind. So that is a wrong thing. Always read the question, then think what answer comes to your mind. Do bari question padho, think what answer comes to your mind, and then check the options that have been given. So you will 90% you will do your MCQ correct if you adopt this kind of strategy. So by the very right, you should not have defaulted in declaring the dividend. If you have not paid the mature deposits, then also you cannot issue. So you should not have defaulted in mature deposits. You should not have defaulted in. These are the defaulting points. The company should not have subsisting default in redemption of preference shares or redemption of debentures. So there is a company which has made a default in redeeming its debentures. So can it issue DVR? No, ma'am, it can. So 2 points, number 4 and 5 we have done regarding default. 6th point is also regarding default. Payment of dividend on preference shares if any default has been made, or term loan. So any loan has been taken from financial institutions or scheduled bank and you have not repaid that. My God, look at this company. It is issuing DVRs and it has not paid its own loan. So law will say first you go and pay your loans. First you pay dividend to your preference shareholders, then only you think about issuing DVRs. Okay? Statutory payment, you're not making the payment to your employees and on the other side you're thinking of issuing DVRs. That is not possible. Or you have defaulted in crediting the amount to Investor Education Protection Fund. In the next chapters, you will be understanding how the IEPF fund is created and what amounts have to be credited. Provided, now this is very important line. Please mark it important because I can't see annotations over here. So I can't mark it for you. So you keep marking important whatever I'm telling you. I am not able to write over here. So here the company may issue equity shares with DVRs upon the expiry of 5 years from the end of financial year in which default has been made. So I told you in 2022, I have defaulted. So you said, ma'am, 24, you cannot make. But if in 2024, I have now filed my financial statements, I have rectified that default or any other default which I have made in 4, 5, 6 point, then from that, in the year in which I have rectified the default, from that year, after the expiry of 5 years, I can issue the equity shares with differential. So 5 years time period has been given to me when I have rectified the default. After those 5 years, I can issue the DVRs. Clear ho gaya? Now the company has not been penalized. Now 7th point is 3 points were related to default. 7th is related to penalty. The company should not have been penalized under SEBI Act, RBI Act. See, your company is planning to issue DVRs, but actually it is doing defaults with SEBI. You're not obeying Securities Exchange Board of India. You're not obeying FEMA. You're not obeying Securities Contract Regulation Act. From last 3 years, you have been doing offense under the RBI Act. How can law allow you to issue DVRs? DVRs are very risky equity shares that you issue. So you have to have a good credibility, the good net worth, and the good, the company should be filing all the financial statements and should not be defaulting under these kind of respective acts. Then only it can think of issuing DVRs. So again, for the last 3 years, company should not have made offense or default under any of these respective acts that are written over here. Now there is a method. The rule has described, this is the section, and now rules will be prescribing what kind of method has to be used for issuing the DVRs. First of all, the notice has to be sent. What is the issue size containing all the details about the notice which is given for the general meeting or the postal ballot. So ordinary resolution has to be passed. For resolution, what do you send? Notice. Before how many days the notice is sent? Refer to your MGT provisions and revise it if you don't remember. So the notice is given for the general meeting. So we will be revising MGT also after in the coming few days. So there we will be understanding all these details about the notice, resolution, each and every day. So explanatory statement has to be given. It should specify the details about the issue of sweat equity shares. Company shall not convert the equity share capital with voting rights into equity share capital carrying differential voting rights. So this is very, very important. You cannot say that, okay, I will not issue DVRs, my existing equity shares, I am going to convert them only. This is not possible. And vice versa is also not possible. You cannot say that DVR shares now we are not, it is very difficult to pay extra dividend to you. So why don't you become my equity shares now? No, you cannot do that. Neither you can convert equity shares into DVRs, nor you can convert the DVRs back into equity share. If you want to do this, you can issue fresh equity capital. And details of such board has to be included in the board of directors reports. Holder of equity shares or holders enjoy all the rights as of the equity shareholders, that is bonus shares, right shares, whatever shares, whatever the holder of equity shares have been given the rights, DVR shares will also get the same. And in what section do you maintain register of members? Section 88. Section 88. So you have to maintain all those who are writing 21 days, 14 days notice. Absolutely correct. That means you have been revising your chapters. And register of members is given under section 88. That will also contain the details of all the shareholders to whom the DVRs have been issued. Is that clear? So I hope DVR version is clear. Please study the questions which are given in the exam. If time permits, in the next class, I'll try to take up certain questions also related to these topics. Now let's move to section 46. Now, what is your share certificate? Share certificate is your prima facie evidence of title to such shares. What is the meaning of title? Referring to the Sale of Goods Act long back when you were doing CA Foundation. In SOGA, you remember the first chapter where the definition of document of title to goods is given. There is a small paragraph under that definition where we try to tell you that share certificate is a document of title. It is the prima facie evidence. If your name is written, if there is a share certificate and Harleen Kaur name is written, that means it is evident that these shares belong to Harleen. So whosoever name is written, prima facie of evidence of title means ownership. That person is having the ownership. Very good. Rishabh, Abhijit, all of you. Satya, Om, Krishna, Mayushi, Swati, all those who are answering side by side, excellently. Good. Pooja is also giving answers over here. That's wonderful, Miss Pooja. Nice. So it is a prima facie evidence of title of such shares. So whatever share certificate has been issued in your name, it's a prima facie evidence and it shall be issued under a common seal. What is the meaning of common seal? If common seal is not there, then who all have to sign it? Two directors or director and the company secretary, where the company has appointed company secretary. Now, if the composition of the board permits, so if the board of directors composition is such that one or two directors shall be person other than MD or whole-time director, then that is also possible. So my board of directors, the composition, that is the whole board that has been made, it has at least one or two directors other than managing and whole-time director, then that is also accepted. Now, when do you issue duplicate share certificates? First of all, now tell me, do we have physical share certificates? Do we get the physical share certificates? Yes or no? What is it talking about? It is talking about losing your share certificates. Then what happened? No is the correct answer. Komalpreet, Abhijit, all of you. But then what is the correct answer? Divya, Rishabh, nice, good. The shares are issued in DMAT form. So it's an old provision when Section 46 of the Companies Act was made, which is trying to tell you that if you're holding the physical share certificate and it get lost, it is toned, it is surrendered, it is something wrong has happened with it, then how the duplicate share certificates can be issued. It is the time when the actually physical shares were given. At that time it is talking about. Nowadays it is the list of depositories. Your name has to be as the name of a beneficial owner. If in the depositories your name has been entered as a beneficial owner, you become the owner. Okay, when you issue the shares in TV. So this all section 46 relate to when we were having physical copies of share certificate. So if your original share certificate gets lost, then what will happen? Nothing. You can get it issued duplicate if board has consented for the same on the basis of evidence proof. Means you have to prove it. So I bolded it over here. It has to be proved. You have to tell them that you have actually lost. It's not that it is hidden in your almirah in the house and you come and you say that I've lost it. You have to tell them how did it got destroyed, how did you lost it, and what happened. Again, if it has been mutilated or torn, थोड़ा सा फट गया है, खराब हो गया है, it has destroyed, it has got torn, then also a renewed share certificate shall be issued. But what you'll have to do, you'll have to surrender the original certificate. So say, for example, if I'm having this original share certificate and it got mutilated, it has got torn like this, now it is not clear, then I have to surrender it. I will have to give it back to the company and then only the duplicate share certificate will be issued to me. Now, how this duplicate certificates or the other certificates are issued, there is a time period for the issue of duplicate share certification. For unlisted company, 3 months from the submission of complete documents. So again, the time periods will be coming. Yamini is written electronic form. So that is DMET form. That is absolutely correct. Okay. So time period for issuing the duplicate share certificates is for unlisted company. Who are the unlisted companies? Those who have not listed their shares in the stock exchange, who are unlisted company, they have been given the time of 3 months. And for listed company, within 45 days from the submission of documents. So in listed company, lesser time period, 45 days, unlisted 3 months can be. Where do you have to record these duplicate certificates and the renewed share certificates? It has to be maintained in form SH2. Now, these are the kind of MCQ questions. Examiner can ask you, okay, fine, there was a shareholder, Mr. A, his share certificate got torn. He went to the company, he surrendered his old share certificate. Company has agreed to issue him duplicate share certificate. He has already given the evidence. He has made the proof. Now the company has issued the duplicate share certificate. The record has to be maintained in SH2, SH1, SH4, or SH3. So remember, it is SH2 form in which the record of the duplicate share certificate has to be maintained. And this register has to be kept at the registered office, the place where the register of members is kept. And company secretary, now who will authorize it? Company secretary, or as the other person authorized by the board, it is kept in the custody of. So anyone who wants to review it, they can go and ask the company secretary to produce this share certificates and registers. They can show it to you and they shall be maintained. All right. So the MCQ question can be for listed companies, how many days you can issue it? Within 45 days. And for the unlisted companies, it is 3 months. Let me just open the study material also. For any provision, if we have missed out from there till now, section 43 and 46 are over. So here you can see India Pharma Labs Limited issued preference share. The preferential dividend is the fixed amount of dividend payable to preference shareholders, and fixed rate 8% has been given. So that fixed dividend will be given to. So all these kind of examples which are given, example 1, 2, all these examples which are given in the study material, you must read them because these are the basis on the basis of which question paper questions are also framed. So this is, I have already told you that company cannot, this was something which I was telling you, that company cannot only have preference share. Plain vanilla we have done, DVS we have done, these are the conditions. So how much voting power shall be there? Differential shareholders, what will be the voting power of differential voting rights? Can they have 80% of the total voting right? True or false? Tell me. Absolutely correct. No, ma'am, it is not 80%. It should not be more than 74%. All of you have given the correct answer. Very nice. So this is your share certificate that we have just taken up. So I told you Rule 99A, we have already studied that it is a record of depository which is maintaining the shares held in depository form. Now the shares are issued in DMAT form. And all the record of the depository is the prima facie evidence. Where is this rule 9A given? It is given with the reference to the chapter of prospectus and allotment of securities. And it is very clearly written that with effect from 2nd October 2018, every listed public company, unlisted public company shall facilitate the securities only in dematerialized form. All right, so this is how the rule has been given, replacing of the original share certificate, and I will show you the number of days also. Somebody is asking the number of days. So the certificate shall be in the form SH1, giving the name of the shares, and for the duplicate also we have understood how the duplicate shares have to be issued. All right. There's the number of days. I'll just show you. So here is your duplicate share certificate SH2. So have you understood? So SH2 reference and SH1, both we have seen. So look here, it is given better. Somebody was asking me, ma'am, number of days, Abhijit, I think you have mentioned. So it is not 15 days, it has to be 45 days. So for unlisted company, 3 months time period is given, and for listed companies, certificate shall be issued within 45 days. I hope it's clear now. Let's move further. So a company may replace all the existing certificates by new certificates without requiring the old ones to be surrendered, and then the new one has to be mentioned the fees. What is the fees that shall be charged? Not exceeding 50% of the certificate payable according to the arrangement as made by the High Court or Central. We have already discussed that the shares have to be held in the demat form. So examiner can ask you for 1 mark question or 2 mark it can come where the shares are held in the record of depository. So that is the prima facie evidence. So what is the prima facie evidence for the interest of the shareholder? That the shares shall be held in the record of the depository. He will ask you in demat form whether it is in the register of members or in the depository. So you will write down it is in the record of depository. That is the prima facie evidence. Share certificate में तो title पे लिखा. So maybe Abhijit, you're referring to the old study material. Swati is also saying on page number 4.13. Okay, I will just check it out and then I'll let you know. Okay, I will just see that I'm writing it down over here. Page number 4.13. You want me to check? I will check and I will get back to you on this. Okay, so shares held in depository form is absolutely clear now. Now, this penalty is very, very important, children, where the company is trying to defraud and issue a duplicate certificate. There is no actual need. There is no actual, then you might be having the old edition, child. You just clear this doubt of yours. Okay, we'll just refer to it later on. So what is the penalty? Now, children, if you're just trying to issue a duplicate certificate and you're just trying to create a fraud, then a very severe penalty is charged. A company with an intention to defraud is issuing a duplicate certificate, then penalty will be charged. What is the minimum fine? 5 times the face value of the shares involved, or 10 times of the face value of the shares, or rupees 10 crore, whichever is higher. So this is the amount of fine. Minimum fine is 5 times the value of the shares. That means you have issued a duplicate share certificate. There was no need. You are just trying to create any fraud. Then company will be liable for this kind of penalty. That is 5 times the face value of the shares involved, and maximum fine will be 10 times of the face value, or rupees 10 crore, whichever is higher. Now, for the officer who is in default, they shall be liable for action under section 447. So my dear students have already completed their revision of prospectus chapter and they have read about section 447. So why don't you quickly answer me in the chat box, what is the liability given under section 447? What is the liability which is given under section 447? Quickly answer me. What is the liability given under 447? What is the limit that has been set? It is liability related to fraud. Very good. So there the limit has been set. You will remember that limit, 1% of the turnover or rupees 10 crore that has been given over there. So what if the limit is higher, then what will be the penalty? If the fraud relates above, the jail of 3 times, the jail of 6 months to 10 years, and if the public interest is involved, 3 years to 10 years. So whatever penalty that you have read, 3 times the amount of fraud involved shall be liable to the officer who is in default. So this kind of penalty, it is an important penalty for the share certificate. You should remember and learn this penalty. Examiner can ask you a question on basis of this penalty. So this chapter only talks about the conditions to be satisfied as well as the penalties to be taken. Now the share certificate rule 5 and C. So share certificate will be issued in form SH1. For the duplicate certificate, it was SH2. Share certificate will be in SH form, SH1 form. All the books related to the records of share certificate shall be preserved in good order for 30 years and case of disputed cases permanent. So if you have any dispute that this is not a correct share certificate, any disputed thing has been happened, then permanently you have to maintain the record. Otherwise, the record of share certificate is maintained for how many years? 30 years. All the certificates which have been surrendered to the company with the word cancelled shall be written, and after 3 years subject to board resolution, they shall be destroyed. So what is the word? Cancelled shall be written for all the share certificate that you have surrendered, and within the period of 3 years shall be destroyed by the company. Company can issue only one share certificate to those where jointly shares are being held. So me and my husband, we have taken up joint shares, then only one share certificate will be issued because we are jointly holding those shares in a company. Okay, good. The penalty for fraud also we have revised 447, so that's great. Moving ahead to the voting rights. What is the meaning of voting rights? The voting rights are given for all the equity shares. So different equity shares, differential voting rights for DBRs, we have different voting rights for equity shares. For uniform voting rights, we have already told you one share, one voting right. And preference shareholders are given the voting rights in respect of 3 important matters. That is dividend if it is not paid for 2 years, in case of winding up, and if anything is directly affecting their interest. But equity shareholders, they can vote on every resolution placed before the company. For the normal shareholders, in proportion of the paid up share capital. For the DVRs, as it is defined in the articles or the terms of the issue. So whatever the articles have defined, how they have to vote, accordingly the voting rights will be influenced. All right. So voting rights, we will refer to the study material also. I will show you the detailed discussion from the study also. But before that, let's do the very, very important concept, variation of shareholders' rights. So like we discussed in prospectus that any variation can be made in the prospectus, provisions have been made. Similarly, can the shareholders' rights be varied? Tell me yes or no. Can you make any variation in the shareholders' rights? Okay, Ayushi Mehta, I will answer this question when we go to the study material. I'll show you the answer for the same. Yes, Abhijit says yes, shareholders' rights can be varied. Khushbu says yes, very good. So where the share capital of the company is divided into different shares, the rights attached to it can also be varied. But there is a process, there is a procedure which has to be followed. Now pay full attention because this is little tricky, but you will answer it. If you'll pay attention, you'll be able to understand. What 2 things are required for making a variation? Number 1, 3/4 of these shareholders shall be given their written consent. Underline the word written consent. Writing consent is very important. Orally, if they're sending, it will not work. So the consent shall be in writing of not less than 3/4 of the issued shares of that particular class. So if there are class A shares and their rights are being varied, so 3/4 of issued shares of that respective class shall be agreeing, shall be giving the written consent. Okay, fine, ma'am. We are okay with this variation. Or SR needs to be passed. So we have already understood in the beginning of this chapter over and SR kya hote hai. So SR needs to be passed at the separate meeting. So class meeting of the shareholders will be held and special resolution will be passed. So what are the 2 important mandatory conditions required in case of any variation? Number 1, 3/4 of the shareholders will give their written consent and special resolution needs to pass, either of the things. So when there is a word or, means this or that. Now it says the variation requires a provision to the effect of MOA or A. That means it should be written in your memorandum or articles of association that yes, you can make this kind of variation. It should not be prohibited. If my articles or any companies that if there any prohibition is given, then you cannot, then no power can be given in MOA. So it says the variation should not be prohibited by terms of such share, means when you're issuing, when no power is given, when you're issuing the shares, you have not prohibited it. Say, for example, there was a company ABC Limited and it issued the shares, and that time it has said that it has already prohibited the variation. It has mentioned that if there is any variation, that shall be prohibited. then you cannot make any changes if there is no power given in MOA. Otherwise, the power has to be given for the variation in MOA and A. Now, the second important point in this topic is if I'm making any changes in class A shareholders and if it is affecting the rights of other class of the shareholders, then again 3/4 of the shareholders' written consent has to be taken for those shareholders also. Let's understand with the help of example. Class A shares rights were being varied. So there is class A shares and class B shares. So I'm trying to make the variation in the class A shares. Then what do I need? What do I need if I'm trying to make the variations in the class A shares? Either 3/4 of the written consent of the class A shareholders or SR needs to be passed for the class B. Do I need the approval? And no need of approval of class B shareholders because I'm not affecting it. But if class B shares are also being affected because of this variation, then what will happen? Then SR will be passed or consent of class B shareholders will be taken. Answer me. If class A shareholders are being changed, all my students have understood, ma'am, we need to pass the SR or 3/4 of the written consent of the shareholders have to be taken. But if this variation in class A shareholders' rights is affecting class B shares also, then what do you need to take? SR or the 3/4 consent or both? Abhishek saying very good. Very good. Class B's consent, Komalpreet, Swati Nai, Satya Gupta, Yamini, all of you are correct. So consent of 3/4 of the class B shareholders shall also be taken. SR is not required in that very case. So this is how the variation of shareholders actually takes place. Now, who are the dissenting shareholders? Can we give the exit? Can we give the option to the dissenting shareholders? Exit offer is given. Who are the dissenting shareholders? Please tell me, students. Yes, who don't agree with the variation. Very good, Satya Gupta. Those who are not agreeing. Very nice. Okay. So provision for the dissenting shareholders, the one who are not agreeing with them. Very nice. So they are not agreeing. So basically, what do you call in Hindi? Naraz shareholders, those who are not happy with this kind of variations. So at least 10% of the issued shares of that class. So in whose shares we were making the variation? Class A shares, we are making the variation. Now, at least 10% of the issued shares of that respective class, they did not consent or did not vote in favor of the resolution. Then what is the choice available to them? Within 21 days of such variation, say for example, if I made the variation on 1st of January, then by 21st, within 21 days of such variation, they can go to the tribunal that, look, we are not happy with this kind of variation and variation will not take place until the tribunal confirms. Now they have filed against the company. They have gone to the tribunal within 21 days. And if 21 days have passed, then it is not applicable. Then they have to go to the tribunal within 20 days. And how many of the shareholders have not agreed? At least 10% of the issued shares of that respective class. The dissenting shareholders shall be holding at least 10% of the issued shares. So what are the provisions to be seen for dissenting? Number one is holding 10% of the issued shares of that class. You have not consented, you have not agreed in the favor of resolution. Then you can apply to the court within how much time? Within 21 days of the variation. Variation will take place as per the tribunal. Decision of the tribunal. If tribunal thinks no variation to be made, that shall be binding on the shareholders, or the shareholders will have to agree whatever tribunal is. And company will file a copy of the tribunal's order with ROC within 30 days. Now, this is something which is very interesting. Generally, ROC के साथ जब कॉपी फाइल करें ना तो 30 days वाला प्रोविजन होता है. इसको थोड़ा सा ऐसा भी माइंड अप्लाई करके you can remember it just for learning purposes. Tribunal's copy came, file it with the ROC. Most of the cases it is within 30 days of the order, copy has to be filed. This can also be your MCQ. Anything can come up. So don't ask me, ma'am, can it come up in MCQ? Anything can come up in the MCQ. All right. So section 41, we have done voting right. 47 also we will first see from the study material also. So children, all those who were having doubts over here, let me first clear your duplicate share certificate doubt. So in which form number you have to issue the share certificate? Quickly answer me in the chat box. SH1, very good. The share certificate has to be in SH1, specifying the name of the person in whose favor it has been issued, shares to which it relates, an amount of paid up capital. And the recording has to be done in section 88, register of members. I hope you have all seen it very clearly now in the new module. There is nothing related to 15 days. So for the share certificate, please children, don't keep writing the same question again and again. I've already cleared it. Duplicate share certificate shall be issued within 3 months. In case of listed company, in case of unlisted company, it shall be issued within 45 days. Okay. And rupees 50 per certificate, not more than that fees shall be charged. Ayushi Mehta, if you're asking about these kind of points, it is written 15 days. Maybe you're referring to the old study material. Because on page number 4.13, point number 3, nothing like that related to 15 days is written in the new module. Okay. Joint shareholders, how many share certificates will be issued if you're holding jointly shares with one of your friends? How many share certificates shall be issued to you? One, very good, single share will be issued. Swati, SH2 is for your duplicate share certificates. All right. Now let's move to the voting rights. We have discussed the voting rights. Every person has the right to vote on every resolution. This is important point which I wanted to show you over here is in case of Nidhi company. So it says his voting right shall be in proportion to his share held in the paid up share capital. So if I'm holding 1 share, I'll get 1 voting right. If I'm holding 5 shares, I get 5 voting rights. But in case of Nidhi company, no member shall exercise the voting rights in excess of the 5% of the total voting rights of the equity shareholders. So it says there was a notification that came on 5th June 2015. In respect to this notification, with respect to this notification, it has been held in case of Nidhi company that they can exercise the voting rights, but it shall not be more than 5% of the total voting power. So how much voting right can be exercised in case of a Nidhi company? The member can only exercise that is less than 5%. So they cannot exceed the 5% of the total voting power of all the equity shareholders taken together. Voting rights means the right of the member to vote in any meeting. You have already done this in first chapter definition. Section 43 has an overriding effect. The holders of equity with DVRs will exercise as per their articles and terms. So I told you for the articles of association will be referring how the voting rights for the DVRs have been framed. Okay, Abhijit Chaudhary, we'll try to clear it up. Voting rights of members holding preference share capital. Every member of a company limited by shares who's holding the preference share capital have the right to vote on resolution. So somebody who was asking, ma'am, voting rights of the preference share capital, here now please your doubts will get clear. Does the preference share capital also have the voting rights? Yes, ma'am. Preference share also shareholders also have the right to vote. On what kind of resolutions they can vote? They can vote on 3 kinds of resolutions. Number 1, the resolutions which are affecting their rights. The resolution which are affecting the rights attached to the preference shares for the winding up of the company or for the repayment or reduction of preference or equity share capital, they can vote on such kind of resolutions. Voting right of preference shares shall be in proportion to his share held in the preference share capital of the company. So whatever share you're holding in the paid up preference, so there is 10 lakh paid up preference capital, and whatever share you're holding of preference share capital in that respective whole capital, that is your voting rights according to that. They have the right to vote where the dividend is being gathered, where they have not been paid for dividend for 2 or more than 2 years. So this is important provision. Second provision to section 47, you can mark it important. We can ask you this kind of question. So dividend should not have been paid for 2 or more than 2 years. Then also the preference shareholders have the right to vote on such kind of resolutions. With the resolutions, both equity and preference are entitled to vote. Proportion of voting of the equity of the preference shall be in the same proportion as in the paid up capital based to the total. So whatever is the paid up capital, same proportion shall be taken for the equity and preference. Let's quickly read down example number 4. InSwift Pharma Labs Limited raised the capital of 300 crores through issue of single series of 8% preference share apart from 1200 crore ordinary shares. They have last paid the dividend to preference shareholders in 2021-20. Now, with effect from 24, assume the right to vote on the resolutions placed. But till this, they can vote only on the resolution which directly. So now, since the dividend has not been paid for 2 or more than 2 years, then they can affect that decision also. But till this respective date, they can only vote on the resolutions which are affecting their direct rights or the winding up or the repayment, which is written in the above section 47 provision. The proportion of voting right, they will have the proportion into the equity shares with the voting rights shall be 4:1. So you can see it how clearly they have explained you. So they are holding 1200 crore. This is 300 crore. So 4:1 is their voting rights power. And this note is given in almost all sections related to IFSC public companies. So you can simply remember that if they are not defaulted in the provisions, then section 47 will not apply to IFSC public. Related to variation also, we have done 75% of the shareholders means 3/4 of the shareholders have made you learn or special resolution has to be passed. And if it is not affecting the other class of the shareholders, then there is no need. And if it's affecting, then the consent of 3/4 of the shareholders have to be taken. For dissenting shareholders, the limit is 10% of the shareholding shall be done by them, 21 days notice, and 30 days you have to file the ROC order. So without referring to your study material, quickly answer me this question. DBS Chemicals Limited issued ordinary shares of different classes. They varied the right of one class where 105 holders were there. 100 out of 105 own 0.5% shares of that class and remaining 5 holders hold 10%. So presuming 100 holders own 0.5% already signed the consent letter, how many holders out of such 5 need to authorize the letter to approve the variation? So he's asking you, how many holders out of 5? So out of 5, how many of them shall be authorizing the letter so that the variations can be approved? Quickly answer me, 0, 1, 3 or 5. And also answer me why you're answering whatever answer you have chosen. Khushbu saying 1. Why Khushbu 1? Abhijit correct. Satya Gupta correct. So it has to be C3, at least 75% of the shareholders. Okay, 3. So out of 3/4 of the 5 that they have taken, they have concluded it to be 3. Mind it, it is 75% of the issued shareholders and not 75% of holders. So it is very important of what amount you are calculating this. 75%, that is 3/4 of the shareholders. New preference shares ranking pari passu with the existing share does not amount to variation requiring the consent. What is the meaning of pari passu? Pari passu means having at par, having the same kind of rights. So cancellation of shares and reduction will not amount to the variation. So when we do the topic of reduction of share capital, please remember even redemption of preference share capital is not a reduction of share capital. And even when you are making any kind of variations, this will not amount to the reduction of capital. Okay, students, let's take a small break over here and let me just figure it out, your 15 days doubt also. Meanwhile, just go through section 43, 46, 47 and 48, which we have done till now. And then we will begin after the break. Satya Gupta is saying in study material for Jan 25, it is 15 days. 45 days is mentioned for the May 25 exam. Okay, don't worry. I will just clear your doubt. Let me just take a break for 5 minutes and we'll just get back. Thank you. Open the presentation. All right, for those who were asking about 15 and 45 days, yes, I have checked it out in study. It is a little different. In Jan 25, it's given 15 days, and in May 25, it is 45 days. So I'm just trying to figure out, let me just verify why it is written 15 days, because it has to be 45 days only. All right. Okay. Moving ahead, call. Somebody has asked, what is pari passu? Pari passu charge means, beta, that you have to give them the same rating at par, means the way the equity shares being taken care of, the same kind of preference have to be given to the other shares also. Okay. All right, Rishabh. So we will do it, this word again in detail. We'll be discussing when we go to sweat equity shares. Now, calls shall be made on uniform basis. What is the meaning of uniform basis? That means you need to have a similarity. You need to have uniformity. Equality has to be there. You have to treat all the shares at a uniform basis. You cannot say that, okay, in class A shares only, that you can have, few of you can have partly paid up, you can have fully paid up. There has to be uniform. The calls made by the company on security holders to pay the amount in respect of partly paid up securities, but where the calls are made on the shares of a class, such calls have to be made on the uniform basis on all the shares. For calls, whatever amount you're calling, you cannot say that okay, you can just have rupees 4 paid up, rupees 3 paid up, and others have to pay up full rupees 10. So it has to be a uniformity. All the shareholders have to be followed on them. All the calls have to be made on a uniform basis. So there's a small summary of section 50 and 51 that I've made for you. So section 49 itna sa ye is that the calls have to be made on uniform basis, and section 50 and 51 tries to tell you about calls in advance. What is the meaning of calls in advance? That means you have paid advance money for your shares. So calls in advance can happen only if it is authorized by the articles. So only if your articles allows you, authorize you, then you can accept the amount from the shareholders in advance. But do you get dividend paid on this kind of advance? It says that interest might be made, but you won't get any dividend for this advance payment. Let me read it out for all of you. It says the company, if authorized by the articles, so if my articles are silent about this advance money, then you cannot receive it. You can accept the advance, whole or part of the amount remaining unpaid, although no part has been called up. So you have still not called up. Suppose there is 5 rupees in application money, 6 has been called an allotment, but you have paid rupees 7, you have paid in advance. Then this advance money can only be taken on the calls if it has been authorized by the article. But this will not give the members to more voting rights as compared to others until the amount have been called up. But the voting rights will only be equivalent to the 6 as per the other shareholders also. Interest can be made only if permitted by the articles. The rate of interest will also be as per the article. So if you say that article say that, okay, interest will be given to you for this advance amount, that can be paid. But if so authorized, they can be permitted to pay dividends in proportion to the amount. Now, section 50 tells you that no voting rights and no dividend will be given. You have invited the advance money, you have received it, but no additional dividend or this voting right will be given to those who have paid the advance money. But yes, if articles permit, then rate of interest can be given. Simple. And what does section 51 tells you? Section 51 tells you that the company may pay the dividend on advance payment, not interest. Company can pay the dividend on the advance amount received, but interest can be paid only if the articles authorize. But if the articles permit, they will pay the dividend in proportion to the amount paid on each share. So section 41 tries to tell you if the share is for rupees 10 each and you have just paid rupees 4, then if your articles allow, then you can pay dividend in proportion to the amount. If rupees 4 has been paid up, then dividend can be paid in proportion to the amount paid on each. This is what your section 51 is trying to tell. So if I ask you that can the dividend be paid on the basis of in proportion to the amount paid, yes or no? Can I pay the dividend in proportion? So yes, I can pay only the articles authorization. So Om Krishnam is absolutely correct. Others have just written yes or no. So that is the correct answer. Yes, ma'am. Only if the articles authorize, then you can pay the dividend in proportion to the amount. Okay. Now, issue of shares at a premium. What is the meaning of premium? Now, again, this is your, when I teach about prospectus, share capital and debentures, I always try to correlate that students must be wondering as if I've opened my accounts book. Do you feel like this when you're studying these kind of topics? You have solved number of questions related to shares, issuing security premium account in class 12th, also in foundation, and this year accounting when you have been doing in inter also. You solved so many questions of redemption of preference shares. You can relate that? That is absolutely good. So it is very easy. And these kind of questions related to security premium account is your accounting question also. So many a times examiner try to frame such a question that both the topics are being covered in a single question. So accounts maybe many a time they ask you that how the security premium account, that amount has been credited, can be used. So first of all, what is the premium? So there is a share of value of rupees 10, but you have issued the shares at the price of rupees 12. Then this 2 rupees is known as the, you have to tell me, know that. Amount received over and above the face value. Very good, Abhishek Singh, Abhijit, Om Krishnan. Amount higher than the par. Very nice, Swati. Good. Then this 2 rupees is, ma'am, the premium that we have received on the shares. Now, if I'm issuing the shares more than the face value, that means premium amount has come up, and now so much amount I have collected in the premium. So it goes to the securities premium account. Premium is the difference between the issue price and the face value of the shares. Issue price is rupees 12. Face value was rupees 10. So rupees 2 is my premium. Very good, Khushbu Verma. Yamini. All of you are correct. Good. When the shares are issued at premium, the amount of premium is transferred to the securities premium account. Pooja, you're not answering. I hope you're understanding, Pooja. Yes. Others are all answering me in the chat box. So that's great. A security premium account will be treated as if it is part of the paid up share capital. So it is a kind of paid up share capital part of it, except where the provisions related to reduction of capital shall apply if securities premium were paid up the share. All right. So what is important over here is how the sorry. My throat is a little bad today, so you have to keep excusing me in between. Section 52, we are talking about securities premium account. So how the securities premium account can be used. Now you cannot learn the bullet points, okay, bonus shares, preliminary for redemption of, you have to write it when the examiner is giving you 3 marks question, how the security premium account. Now this is important. You keep asking what is important. It's important to learn it as it is. Not for maintaining, not for creating. It is for writing of the preliminary expenses. You have to learn it in the same. So security premium account, you have understood now concept. The shares have been issued more than the face value. Issue price is higher than the face value. You have collected the premium. That premium has gone to the securities premium account. Now we have a huge bulk of security premium account. How we are going to use it? Number 1 is for the issue of unissued shares of the company to the members. So this premium amount can be used for issuing the unissued shares of the company. Number 2, for writing of the preliminary expenses. What are the preliminary expenses, children? Can anyone tell me what is the meaning of preliminary expenses? Quickly, hurry up, tell me. The expenses incurred related to incorporation of the company, incurred prior to incorporation, formation expenses. So if those kind of expenditures, miscellaneous expenditures, preliminary expenditures are lying over there, this amount of security premium can be used for writing it off. Very good, Kavita, Yushi, Satya, all of you, Kushbu, Swati, everyone answering wonderful answers. Writing of the issue expenses including commission or discount allowed on the shares. So in the next section, you will understand you cannot issue the shares on discount, but if you have issued in the certain exceptional cases where the shares can be issued on discount, so those expenditures for issue expenses, commission, underwriting commissions also, if any has been paid, for writing of those expenditures also, security premium account can be used. And premium payable on the redemption of preference shares or debentures. So you want to pay the premium, you're redeeming the preference shares and you're redeeming them on premium. From the security premium which has been on the issue can be utilized for redemption also. And what is buyback of securities? In the next class, we will be discussing at length about section 68, how you can do the buyback, how you can purchase your own securities. For that buyback also, security premium account money can be used. So for issuing bonus shares, unissued shares, writing of preliminary expenses, writing of issues, expenditure on discounts, redemption on the premium to be payable, and buyback of securities, security premium account can be used. But now subsection 3 has an overriding effect. Now, what is it trying to tell you? First, we'll read what is written in the law. It says overriding effect on subsection 1 and 2. What was subsection 1? Subsection 1 tells you how the premium is made. Subsection 2 tells you utilization. Such companies whose financial statements are governed by the accounting standards under section 133. So if you are a company and your financial statements are governed by accounting standards, then the security premium account can only be used for 3 purposes. Then it will not be used for this preliminary and redemption thing. Then it is only used for the first, that is bonus, third, that is issue expenses, and the fifth. So if you are a company whose financial statements are being made as per accounting standards, then you will use your security premium account for only these 3 purposes, that is issue of fully paid bonus shares, for writing of issue expenses, that is including commission or discount allowed, and for buying. So now my MCQ question to my class student is, there is a company to whom the accounting standards under section 133 is being made applicable, and they are preparing their financial statements as per the accounting standards of section 133. And that company has issued the shares at a premium. Can that company use that security premium account for writing of preliminary expenses of the company? True or false? The company utilizes the securities premium account money for writing of preliminary expenses of the company. True or false? Rishabh is saying true. Very bad, Rishabh. That means you're not paying attention. And everybody else has said false. Khushbu also said true. Khushbu, that means you did not listen carefully. So you all have to pay your full eyes and ears concentration when I'm telling you the question. It's okay. It's okay. So now you have understood. Yes, Manish, that's correct. All of you have given the correct answers. Wonderful answers by given by all of you. So if you are a company to whom this accounting standard is applicable, then no, you cannot use the securities premium account for writing of the preliminary expenses. Why, ma'am? Because subsection 3 says, then only for these 3 purposes which are written in front of you on the screen, it can be only used for that. Clear ho gaya? Samajh aa gaya? Now comes your favorite section. After 52, we have done. So what is 53? Oh my God, we have left section 53. So again, it's the time to go to the study material, because that is how we keep referring to the study material can be kept in view. So voting rights, section 47. I hope no doubt in voting rights now. Paripasu also explained you. Yes, Rishabh Gupta, issue expenses can be set off, like commission expenses, discount expenses, that can be set off. Yes, Abhijit, it definitely makes a difference, because law is not permitting you. So whatever is written in law is the Bible for us. We have to follow. So it's simply trying to give you exemption for 2 things. That is for premium on redemption and the preliminary expenses have been excluded because you're following the accounting standard. So there you will be utilizing the amount as per the accounting standard provisions that have been given. All right, that is why it has a having a difference. Okay, so this is your section 49. We have discussed it. So Prism Glass Limited issued 3 series of equity shares. All carry nominal value of ₹100 and the paid up value is 100, 80 and 50. They all will be considered as different class, since for the first class share is fully paid up, no call can be made. In the remaining 2 classes, call can be made. So they all are different class of shares. So this chapter elaboratively tells you about the class of shares, that kind of things that used to come up in your mind when you're studying the chapter of prospectus. So chapter 3 and chapter 4 are very interrelated. So whenever you are revising your Companies Act, don't do like this, that prospectus and then FEMA you're revising. Always revise chapter 3 and chapter 4 together and then try to do the questions, because they're having then after doing debentures, you should always revise deposits along with that, because they have interrelated provision. It becomes easy for you. Again, just a tip for you to make it easy. Where the shareholders paid the first 2 calls after a great delay and neglected to pay the 3rd call, directors being annoyed and called to pay the whole amount. So is it a valid? A call cannot be made on some of the members only unless it is a separate class of shareholder. Therefore, the call will be in. So Section 49 simply tells you that uniform rights have to be given and uniformity has to be given. It's okay, Sunil Kumar, no worry. Calls in advance, Section 40 calls in advance. So if you have called the advance money, do you need to pay the interest on this advance amount? Tell me. Only if the articles permit. Very good. The rate of interest is permitted on the articles. The same could be varied. To illustrate, 6% may increase to 10% of the shareholders. So whatever rate has been given as per the articles of association of respective company. But my question to all of you is, if a shareholder, Mr. A, he has given advance money on the calls, will he get more voting rights as compared to others? So everybody has just paid rupees 5 on the share, and there is Mr. A shareholder who has paid rupees 7, 2 rupees extra as advance money. Will he get additional voting right? So well done. All of you have said no, ma'am. Very nice. That means you're understanding it. That's excellent. Is tarah se keep framing questions in your mind whenever you're revising. The more and more questions, brainstorming you will do, things become very simplified. So I hope you all are enjoying the session by doing it in this way. Okay. Coriander Masala Limited has issued 10 lakh equity shares of rupees 10, on which 6 has been called till allotment and first and final call 4 is to make. So 6 has been called, 4 is it. Reena, who has paid the whole amount. Now this Reena, she was very smart. She paid the shares amount and it falls in advance. In the upcoming extraordinary general meeting, she wants to exercise her voting rights as the owner of fully paid shares. Company cannot permit as she does not have the voting rights in respect of the advance amount. Please mark these questions very, very important. We actually see how beautifully module has been made for all of you children. But you don't even need to open out any other book or reference or examples. It has explained the point then and there itself. Okay, so restriction will continue till the amount is called up. Means till the time 4 is only paid, that the 5 will be called, then 5 voting right. 7 will be called 7, 8 will be called. Till the time fully called up nahi hoga, usko voting right, she will get only the amount which has been called up. All right, so this Moon Star machinery is also, you can read it. It is also very simple, self-explanatory. So the directors will pay the dividend on pro rata basis only if the equities are not equally paid up. However, if preference to capital dividend is always paid at the fixed rate, you own. Issue of shares we have already done at premium. I hope you all are clear. Now let's move to the, can we issue the shares at discount? Yes, ma'am, or no, ma'am? Hurry up. Answer me. Can we issue the shares at discount? All those who says no, what happened if we issue the shares at discount? It becomes void. The allotment of shares, if you're doing any issuing of shares at discount, it will be held void. You cannot issue the shares at a discount. Company is prohibited. Section 53 talks about only this thing, that the company is prohibited. Very good, although subject to exceptions. Abhijit is learning to be very smart because he is trying to write the language of law. Yes, somebody saying, yes, we can issue, but not in general. Okay, Ayushi Mehta say not in general. Only for creditors shares are issued, otherwise it is void. So, Kavita, Kushi, they are trying to give examples and exceptions also. So, very good, very good. That means you have been revising it next. So, there is a prohibition. The section 53 in itself starts with this word that there is a prohibition. You cannot issue the shares at discount. If you issue the shares at discount, means you're issuing the lower than the face value. If the shares are rupees 10 each, you're issuing them at rupees 8. That means you're issuing them at discount. And this differential amount is rupees 2 as discount. So, you cannot issue the shares at discount. It is void only in the 2 cases. Say, for example, for 500 and it is issued at lower price, 5 rupees is the discount allowed by the government. Though the title used the word prohibited, but indeed it is not fully prohibited. It is only restricted after the enactment of the Companies Amendment Act 2007. So it says after Companies Amendment Act 2017, the word prohibition has been included in the section. Otherwise, it is not fully prohibited. Why? Because your sweat equity shares can be issued at discount. So how, my dear students, are going to learn it? First, number 1 point, they will write down in your notes. Shares cannot be issued at discount. It is void. There are 2 exceptions to it. Number 1 exceptions, sweat equity shares can be issued at discount. Clear. Point number 2, there is an overriding provision where the shares are issued at discount to the creditors as a result of converting their debt on company into shares because of the statutory resolution plan or debt restructuring scheme. Now, children, there is a regulation as per specified by RBI. Certain guidelines have been given. There is a debt restructuring scheme. You don't have to go into much of the detail. You simply have to learn the amendment which is given over it. Number one amendment is, as per the sweat equity shares, they can be issued at discount, and where the company is issuing the shares to the creditors because the debt is to be converted. So there is some money which we want to receive from them. That debt is not being received. Company is in cash crunch. The debt restructuring scheme is being adopted by the company. They can convert their company's debt into shares. So, or there is a statutory resolution as per that. There is a restructuring scheme or the statutory resolution plan according to the guidelines which have been given by the RBI. According to that, following that, this kind of conversion can be made, then the shares can be issued at discount. Okay, so exceptions can be asked to you in the exam. What are the exceptions where the shares can be issued at discount? Number one, for sweat equity share. Number two, for converting the creditor's debt into shares under the debt restructuring scheme or statutory compliance to be made as per the RBI. Simple. Now, penalty is important. So far, we have done one penalty in the morning. Second penalty we are doing. After this also, section 59, I think we'll be talking about penalty. So 53 says penalty, any officer in default who has issued the shares at discount, amount equivalent to the amount raised, or 5 lakh rupees. Wherever in numerical it is written, अपने हाथ से pen से numbers में लिख लिया करो penalty. It always becomes easy to remember. And also, as I always keep telling students, that whenever you are learning Companies Act, whenever any penalty comes, keep writing it down on a separate sheet of paper. Stick that sheet of paper over the pages, first page of the book, so that on the last day, you can just flip through the pages for the penalty. Why to leave anything? Now, when you have done so much, you are doing all the provisions, why to leave penalty also? Why to leave 2 marks question? 2 marks question, definitely, I feel so, can come for the MCQs for penalty. Any penalty can come. So there can be chances. It has been coming. So on the basis of that, I'm saying. So you should do it. You should not leave anything, whatever is given in your study. So officer in default, amount equal to the amount raised to issue shares or 5 lakh, whichever is less, and refund all the money with interest at the rate of 12% per annum has to be paid. So whenever you were refunding the money in case of prospectus, application interest of 15% per annum were paid there. Here you can remember issue of shares at discount is 12% per annum. So again, relating the things, refund वाले में 15 था, यहाँ पे 12 है, ऐसे भी learning becomes easy. The restrictions of 52-53 will only apply to the issue of shares equity, but not to the debt-related bonds and debentures. It is not applicable to the bonds and debentures. Now comes your favorite topic, that is sweat equity shares. What is sweat equity shares? What do you understand by sweat equity shares? Are there any different kind of shares? What is sweat equity shares? My question to the class. These equity shares, sweat equity shares in itself says that yes, ma'am, it is equity shares. What is the meaning of sweat? Sweat means all the hard work that you have done. You are doing certain kind of innovations for the company. You are bringing any value addition. You are doing something, what do you call that? We are providing any know-how, technical knowledge to the company. So all that sweat that the employee has taken out for this hard work, company feels that you should be paid for this hard work. So you're such a hardworking employee or director of my company. You have been contributing certain value additions. You have been contributing in the know-how. Why don't I also, it's my time to pay you something. Like I pay you bonus shares. Somebody is saying it is a kind of bonus shares. So like I pay you bonus shares, I'm giving you the gift for the sweat that you have, hard work sweat that you have done for the company. I give you sweat equity shares. So it's all for the hard work of the employees, directors that you're giving them. And yes, ma'am, they are issued at discount. Absolutely correct. Consideration to the employees for the value addition, consideration shares issued for vesting period, sweat equity given to the employees. Very good, excellent, all those. I'm not going to name names because almost everyone has answered it correct. So clap for yourself. Good. Now, how the sweat equity shares are issued? So we have done securities premium, we have done shares issued at discount, we have done the voting rights, variations. Now we have moved to sweat equity shares. So sweat equity shares means the shares issued to the directors or employees of the company at a discount or for consideration other than cash. What is the meaning of consideration other than cash? Means you are, I am giving you the shares. You will, what will the public actually does? Public pays me cash, I give you the shares. Sweat equity shares, I'm not getting cash, I'm getting know-how. I'm getting the rights related to the intellectual property or certain value additions. So directors or employees are bringing in know-how, intellectual property, value additions, and they are getting shares in return of that. That is what is the meaning of sweat equity shares. Now, the way you are, yes, non-monetary terms, absolutely correct. So the way you have done the conditions for DVRs in the morning, now we're going to do what are the certain conditions for sweat equity shares. So number one, the sweat equity shares can be issued only if the following conditions are fulfilled. The question says that the share of that class must have already been issued. So if I've already issued the same kind of class, as per that class only the sweat equity can be issued. So it should be of the same class which has already been issued. The issue is authorized by a special resolution. So my question to my dear class is, the DVRs, that is differential voting rights, and the sweat equity shares are issued by the company by passing a special resolution. So it is written in front of you, sweat equity are issued by special resolution. So DVRs and sweat equity both are issued by passing special resolution. True or false? Somehow I believe that my smile also tells you that ma'am is asking this question. There must be something tricky in this. So at times I feel that you write answer on the basis of that also. See, very good. Those who are writing false is absolutely correct. There is one I could find true. Let me just ask him why he has written true. कौन था ये? अब change कर दिया false. Okay, so false is the correct answer, and Swati and Komal, Abhijit, all of you are correct, and somebody who is writing the option also, ma'am, because in DVRs we are issuing ordinary resolution. Very good, sir. So you have to, this is how you have to remember. So in DVRs, ordinary resolution, sweat equity shares is authorized by a special resolution. And before that, where have we started the special resolution? In the variation of shareholders' rights. What was in the variation of shareholders' rights? Just the special resolution or anything else also? चलो देखते कितना याद है. In case of variation, this is the correct that you have asked. This one is correct, all of you. 3/4 of the written consent is also required. Wow, intelligent students in my class. Great. Okay, so special resolution has to be passed. Shares must be already issued earlier. Resolution, what will it specify? Number of shares, consideration, all these things shall be specified in the resolution, the notice that is going to be passed in this kind of special resolution. The rights, limitation, and restrictions which are for the time being applicable to the equity shares. So whatever restrictions and provisions are applicable to the equity shares, they shall also become applicable to the sweat equity shares. So there is a shareholder, Mr. A, to whom you are issuing the sweat equity shares. So whatever the rights, he is already holding 100 equity shares, same class, he is issuing more sweat equity shares. So whatever rights, limitations are applicable to those 100 equity shares, they will be applicable to the sweat equity shares. Holder of sweat equity shares shall rank pari passu with other equity shareholders. So if I have got sweat equity shares, I have been a hardworking employee of my company, and the company is now happy. They have decided to issue the sweat equity shares. So if I am a holder, I am pari passu, means at par with other equity shareholders. So I have equal voting. So you have equal footing with you have same obligations and rights and equal footing as compared to other equity shareholders. Similar kind of rights given as given to the other equity shareholders. This is the meaning of the word pari passu. Okay. Now comes your sweat equity shares further regulations, how the resolution is issued, and for what long period this resolution has to remain. Now, if you listen very carefully, then you will learn it the way you have been learning so far the chapter. This will also something which you learn quickly. So what is the time period for which the special resolution is open? It is open for a period of 12 months. It is not valid for more than 12 months. So that means one special resolution has been passed within a period of 12 months. You have to issue the shares. There is a definition of employee also before moving forward. I want to take up the definition of employee to whom these shares are actually given. A permanent employee of the company who has been working in India or outside India, director of the company, whether he is a full-time or not, employee or director, either of holding or subsidiary company in India or outside. So now my question to the audience is, there is a very hardworking employee. There is a company, ABC Limited in Bangalore, and they have a permanent employee who is working in US. And he's a hardworking employee. He's a permanent employee of the company. and there is a director who is not a whole-time director, can the company issue sweat equity shares to that employee who is working in US and also the director who is not a whole-time director? Good. Well done. Well done. Well done. Well done. All of you have answered it correctly. Great. Yes, ma'am. It can be issued because it is clearly written inside India or outside. So there is a company, Reliance, which is a listed company, and they want to issue sweat equity shares to its subsidiary companies' employees. So can a holding company issue the sweat equity shares to the employees of subsidiary company, which is whether in India or outside India? Yes, ma'am, it can issue. Why? Because no, Abhishek Singh is saying no. So that is wrong. Others have said yes. It is correct because please read point number C, Abhishek Singh. Employee means any employer director who is either in India or outside India, whether he is a whole-time director or not, even of a holding or subsidiary. So holding company can also issue to the directors, or because only a listed company. If a holding is only listed and subsidiary company wants to give the shares, sweat equity shares to its employees, and holding company can also give the sweat equity shares to the employees of subsidiary. Okay, meaning of employee, everyone is clear. And what is value addition? Value addition is the economic benefit that the expert have been valued by the registered value, and you're bringing it to the company. Now let's understand all the provisions related to the sweat equity shares. So sweat equity shares shall be remain valid for a period of 12 months. So if 15 months have passed, can a company now issue a sweat equity shares? Company did not issue the sweat equity shares in 12 months period of the special resolution, and after 15 months it's lapsed. So no, this cannot be done. The process of sweat equity shares have to be fulfilled in the period of 12 months from the date of passing. Now, what is the limit set up for these sweat equity shares? Maximum amount, how much maximum sweat equity shares can be issued? It's 15% of the existing paid up share capital or shares of the issue value of rupees 5 crore. So it says if I want to issue the share capital, say for example, the paid up share capital of the company, paid up equity share capital of the company is rupees 10 crore. So what will be the 15% of the paid up share capital? That is rupees 1.5 crore. Or maximum limit is 5 crore, whichever is higher. So I can issue the sweat equity shares either 1.5 crore, that is 15% of the 10 crores, or rupees 5 crore, whichever is higher is 5 crores. Now it says there is a cumulative limit which says that the issue of sweat equity shares at any time shall not exceed 25% of the paid up equity capital. So in our example, what have I taken? 10 crore. So what is 25% of this paid up equity capital? That is 2.5 crore. Now, if you see the limit, I just fell into the limit 1.5 crore or 5 crore, whichever is higher, that is 5 crores. So company said that, okay, fine, I'm going to issue sweat because this is the maximum limit. So company said that 5 crore that we can issue. Now company decides, okay, 4 crore amount we will be using for issuing sweat equity shares. But there is a major cap that you cannot go beyond 25%, which is 2.5 crores. So in my example that I've taken, it comes to 2.5 crore is the max cap. So my question to the class is, can the company issues on the basis of 15% or 5 crore, whichever is higher, I've got 5 crore, but the max cap is 2.5 crore. Can the company issue 4 crore of the sweat equity shares? Yes or no? Very good. No is the correct answer. So it can issue only up till maximum, that is 2.5 crore. Sabko clear hai? Everybody is clear. So what is the maximum limit of sweat equity shares? 15% of the paid up equity share capital. There is a word used, equity share capital. Examiner will give you 100 crore equity, 100 crore preference, 15% of what will you do? Equity share capital, paid up equity share capital, 15% of 100 you will. Or 5 crore, whichever is higher. Maximum cap is 25% of the paid up equity, so 2.5 से ज़्यादा नहीं हो सकता. Is there any exemption given to the startup companies? Yes, ma'am. Exemption has been given to the startup companies for the first 10 years. The maximum cap allowed to them is 50% of the paid up share capital. What is the difference between paid up share capital and paid up equity share capital? Can you tell me, my dear students? I've used the word PSC over here, paid up share capital. Earlier, I was using the word paid up equity share capital. Very good, Swati. Now I will be considering both equity as well as preference. Very good, Om Krishnam. Very nice. Very nice. So here in the above provision, the limit is for the paid up equity share capital only. Learn karna padega. Examiner will give you questions. Such kind of questions can come. So Yamin, very good. So paid up share capital will include preference share capital. So Abhishek saying very nice. All of you have written correctly. So here, now what will be the limit? 50% of the, if there is 100 crore equity and 20 crore preference. So 100 plus 20, 120. So 120 ka 50%. You will be taking 60 crore up till that amount. The startup company for the first 10 years can issue the sweat equity shares. Clear? Okay, support. Everyone is clear on this. What is the lock-in period? What is the meaning of lock-in period? Sweat equity shares are issued for the lock-in period of 3 years from the date of allotment. Question to the class. What is lock-in period? Till what time you have to hold the shares? You cannot transfer it further. So the maximum period of lock-in allowed in this case is 3 years where the sweat equity shares are issued to the employees. And how the valuation has to be done? They will be valued by the registered value at a fair valuation. Valuation of IPR is your intellectual property rights, know-how valuations also become the registered value, and report has to be given. Why? Because the report has to be given to the board of directors. I am giving you shares, you're also giving me something in return. So whatever property you're bringing, whatever valuation, the registered value will try to check the valuation report will be prepared, and they will try to see what is the value of the consideration that you're giving in return of these particular issues. And if it is a depreciable or amortizable asset, then you will take it to the balance sheet. Now, what will happen? You have given the shares. They have given you the know-how or some asset in return. So if it is an asset, you will carry it to the balance sheet. But if it is anything other than the asset, then you will record it as an expense in your P&L account. And the equity will be credited in your equity share capital, the shares that you have issued. The disclosure in director's report has to be made. It is very important that you disclose in the director's reports that you are issuing the sweat equity shares. And the register will be maintained in form SH3. So far, how many forms we have done? SH1 was for share certificate issuing, SH2 was for the duplicate share certificate, and now SH3 you are issuing for the sweat equity shares that has to be kept as a register. And this register has to be maintained at the registered office of your company. All right. So sweat equity shares is also very nicely done with the class. Let's have a round over here. Pari passu is a Latin phrase which means equal footing, means you have to treat them equally. A company was commencing the business 9th November, can issue sweat equity only after 8th November 2023. So there is no condition. Can you read illustration true and false? Is there any condition given under sweat equity shares regarding the age of company? Have you studied like that? What was the 12th month condition? Can you tell me? What was that 12th month condition? You think company was incorporated, they're issuing only after this date. Have you done anything like that? No, man. The 12th month condition is for the special resolution that. Okay. So permanent employee value additions definition, you can just give it a reading. What is the kind of value addition? And you can mention that registered value has to value it. 12 months period was for the special resolution, 3 years lock-in period, fair price. I think we have covered everything in the notes also. So you can refer to my notes. Each and everything has been covered over there as well. Okay. Yes, correct answers given. Any doubts still here? Because now we'll be moving at a very high speed towards these sections because it is very, very elaborative section. We are still too pending with the preference shares, transfer, transmission. Abhijit says he has a doubt on example number 4. Okay, let me take you to the example number 4. On what page it is given, beta? Okay, what doubt are you having, Abhijit, in this? Om Krishnam has written everything clear. That's great. Abhijit, you can write your doubt. So it is simply telling you that the voting rights, how the voting rights have to be considered. The equity shareholders, preference shareholders are holding 1200 crore and equities are holding 300 crores. They can vote after 2 years for not giving dividend. Yes, that is absolutely correct. So for the 2 years, if the dividend has not been paid, then they can vote on that kind of resolution. Otherwise, they can only vote on the resolutions which are directly affecting their rights or the winding. So you can clearly read it over here, section 47. Subsection 2 clearly tells you that they have the right to vote on two resolution. Number one which is affecting their rights, and number two, in the case of winding up, for the repayment of capital. For the case of dividend, they shall be for a period of 2 years or more. If they has not been paid, then only they can take up an action in this case. All right. My throat is real bad, children. I would request you to read it. Let's take a small 5 minutes break because then we have to continue beyond 1:30. It can go beyond that also. But just 5 minutes break and then we finish section 55 to 59. Moving ahead. I hope no doubt still here. All right, Abhijit. Great. You're not having any doubts. So that means all your doubts are getting cleared. So wonderful. Thank you, Khushbu. Yes, my throat is now better. Thank you, Vita. All right. So sweat equity shares are also done nicely. Now we are moving to the issue and redemption of preference shares. So can we issue preference shares? So the first question is, can we issue irredeemable preference shares? One is redeemable preference shares. Another is irredeemable preference shares. Can we issue the preference shares which are not going to be redeemed? Yes or no? Can we issue irredeemable preference shares? No, ma'am, we cannot issue irredeemable preference shares because company limited by shares will not issue any preference shares which are irredeemable. Means once you issue the preference shares, they have to be redeemed. Once you have issued it, you have to redeem it. And we are going to discuss all the provisions related to issue of preference shares. Number one, it has to be authorized by the articles. Number two, SR and general meeting. So similar kinds, sweat equity authorized in articles, SR, again preference shares authorized by articles, SR has to be passed. No default in two things have to be made, redemption of preference shares or payment of dividend. So we should not make any default. This is actually the preferential right that they have. They have to be paid dividend and redemption of preference shares have to happen. When shall the preference shares be redeemed? After the period of not exceeding 20 years. So 20 years is the maximum period for which the preference shares can be issued. What is the exception to this maximum tenure limit of 20 years? But before that, if ABC company has issued preference shares, say in 2024, by when we can redeem them? What is the maximum time period? Tell me. Hurry up. Preference shares shall be redeemed within how much time period? By when it can be? So it is maximum for 20 periods. So 24, 34, 44. So maximum by 2044 it can be issued. It has to be redeemed after 20 years. It has to be redeemed. Very good. All of you have answered correctly. But if it is an infrastructure project company, the company which is into infrastructure projects, that company can issue preference shares for a period exceeding 20 years, but not exceeding 30 years. So if it is an infrastructure company, they have issued preference shares in 24, then they can redeem it maximum by 2054. So 2024, they have issued it 2054, not beyond that maximum, exceeding 20 years, but not exceeding 30 years. And what is the second condition for them? That from the 21st year onwards, that means after 2024 till 2044, 20 years are over, from 45, that is 21st year onwards, 10% of the preference shares annually shall be redeemed. So infrastructure projects exception has been given. They can issue preference shares for a period exceeding 30 years. Maximum tenure is 20 years. The infrastructure 30 years, can go beyond 20 years, but maximum 30 years. But from the 21st year onward, they shall every year they shall redeem 10% of the preference shares have to be redeemed. Is that clear? So examiner can ask you such kind of questions. If it is an infrastructure company, it did not redeem the shares in 20 years. Is it okay? True or false? Yes, it is okay because they have the power to go beyond 20 years, but they cannot go beyond 30 years. Then limits kind of question can come from 21st year onwards. 5% preference shares have to be redeemed, 10% or 8%. So what will be answer? How much preference shares have to be redeemed? Good, Yamin. 10%. Okay, nice. Okay. Now, redemption of preference shares. Now, this is very interesting. This is issue of preference shares. Here we were issuing the preference shares. Section 55 में issue भी है and redemption. Both are things are. Now we're talking about redemption of preference shares. So preference shares are redeemed out of the profits of the company, which would otherwise be available for dividend, or the proceeds of the fresh issue of shares made for such thing. So the company will issue fresh shares, will collect the money, and use that money for the redemption of preference shares. You have done it in accounts number of times, right? Practical questions. Now you're understanding theory. So preference shares shall be redeemed out of the profits of the company, which were otherwise available for dividend. Now you can redeem the out of profits or out of fresh proceeds. Shares which are to be redeemed shall be fully paid. Means you were 10 rupees per share, you have paid up 8. Now you should pay up first rupees 2, fully paid up shares, then only they can be redeemed. What is the capital redemption reserve? Whenever you redeem the preference shares, out of the profits, you have to create a capital redemption reserve. Now, what is this capital redemption reserve? A sum equivalent to the nominal amount of shares which are to be redeemed, the value of the shares, nominal amount of the shares which are redeeming. If you are redeeming it out of the profits, then a sum equal to nominal amount of the shares have to be transferred to a reserve called capital redemption reserve. And children, this reserve is utilized for paying up fully paid bonus shares. And there is a capital redemption reserve which is created equivalent to the amount of nominal amount of the shares, but this is created only if you are redeeming the preference shares out of the profits. So the redemption of preference shares can be done either out of the profits or out of the fresh issue of shares. So if you are redeeming them out of the profits, then CRR is created, that is capital redemption reserve. What is the amount? It is equivalent to the amount of the nominal value of the shares. And what is the use? This capital redemption reserve has to be maintained, and it can be used only for the payment of fully paid bonus shares. Amounts of credited to CRR has to be maintained with the same sanity as the paid up share. So as if it is a paid up share capital, that kind of amount has to be maintained. It can be reduced only in the manner the paid up share capital of the company can be reduced. So when you do the reduction of share capital with me, there we will understand. But does the preference of redemption of preference shares amount to reduction? Very good, Abhishek Singh. CRR is created to maintain the capital structure of the company. Very nice. So it is treated as the paid up share capital of the company only, and it can be reduced only as if the share capital is reduced. And does the redemption of preference shares amount to reduction of the company's share capital? When you're redeeming the preference shares, that means you're reducing the share capital. The answer is no. The redemption of preference shares is not as the reduction of share capital. Reduction of share capital, we will understand how the reduction happens in the further sections. But when you're redeeming preference shares, it will not mean that you're reducing the share capital of the company. Redemption is not the reduction of the company's share. Now, what about the premium? It says the premium can also be given out of the profits or security premium account. One is you're redeeming the preference shares out of the profits or out of the fresh proceeds. Out of the fresh proceeds, if you're doing, then it's okay. Out of the profits, if you're doing, CRR will be created equal to the nominal amount of the shares, and this CRR is used for paying fully paid shares. If you're paying premium on the preference shares, then that shall be paid out of the profits or out of the security premium. Where the companies whose financial statements comply with the accounting standards, then only out of the profits. Remember, security premium account we have just done in that particular section. What we have done, that if the companies whose financial statements comply with accounting standards, then you cannot use the security premium for two things. Number one, for those preliminary expenses and for paying premium on redemption of preference shares. So then you will only redeem out of the profits. Please try to link this particular point with the security premium account that we have studied before. Such premium shall be provided for redemption, and register of members will contain all the details of preference shareholders, how they have been redeemed, how many shares were there, how much have been paid, how much fresh shares have been issued. Each and every detail shall be maintained in the register of members. Now, what happens if the company is unable to redeem the existing preference shares or pay dividend? Is there any kind of problem which occurs if the company is not able to redeem? Suppose the company is not having enough money, company is not in a position that we don't have money, we cannot redeem the preference shares or we can pay dividend, then it is called unredeemed preference shares. Company is not able to redeem according to the issue. Company is not having profits, company is not having money to redeem or pay off the buyback the preference shares, or pay off redeem of them. Then the company will have to issue further redeemable preference shares to the holder of unredeemed preference shares. How much amount? Equal to the amount due, including the dividend, and consent of the 3/4 of the unredeemed preference shareholder has to be taken for this thing. So what will happen? Suppose there is a company ABC Limited. It is not in a good position. It does not have much of the profits. It is neither able to pay the dividend to the preference shareholders, neither it can redeem the preference shares. Now, this company will take the consent of the 3/4 of the value of, now, what will you call these shareholders? You'll call them unredeemed preference shares. So 3/4 of the value of these shareholders will give the consent and also approval of tribunal. They will go to the tribunal, they will file a petition, and approval of tribunal has to be taken. And further, redeemable preference shares have to be issued. And children, when you issue these redeemable preference shares to them, it will be said as if the unredeemed preference shares have been redeemed. When you issue, so instead of redeeming them, you're issuing them more redeemable preference shares. And when you issue these redeemable preference shares, it will be said as if it shall deem to have been that the preference shares have been redeemed. Okay. So tribunal on the order of the preference shares of person who has not consented will further allow them to this transfer. Let me take you to the study material because we have to do one example number 11 also from there. Swept equity we are already done. Yes, company can extend the period of Sheikh Singh. We just did for maximum 20 period, 20 years the preference shares are renewed. Yes, they can extend it for the renewal of preference shares also. So this is out of the proceeds of fresh issue fully paid up. CRR has to be created. CRR will be used only for the payment of bonus shares. Example number 10 is very, very easy. You can just go through it. Sources of premium, again, we have discussed out of the profits. And those who are not following the companies, but then that only you have to follow. You can refer to my notes because they're much simpler language for this thing. Now, this is the whole story that we just discussed. If company is not in a position, this is the topic that we're doing. Company is not able to pay back, then it will issue further redeemable preference shares. So company is not in a position, company will issue redeemable preference shares equal to the amount including dividend. Consent has to be taken of 3/4 of the unredeemed preference shares and approval of tribunal. Then it was said that the unredeemed preference shares have been redeemed. With regard to the preference shares held by shareholders who have not consented, tribunal will order their redemption forthwith. Forthwith means immediately while giving the approval. So they were dissenting shareholders who did not agree. They have not sent their consent of this 3/4 because we have taken the consent of 3/4 of the value of preference shareholders and appeal has been filed to tribunal. But we also saw that when the consent, tribunal consent was giving, then other than those 3/4 of the shareholders have given the consent, then other than those balance shareholders who have not consented, their redemption will happen immediately. So Bell's Home Furniture Limited unable to redeem their preference shares when they became due. So there was a company, their preference shares after 20 years, if they have been issued maximum for 20 years, they became due to have been redeemed. This company decided to issue further preference shares against the unredeemed preference shares. That means it was not having enough profits to redeem the preference shares or pay the dividend. They decided to issue the further more preference shares. Holder holding 93% of such unredeemed preference shares gave their consent and tribunal assented to issue. So the consent was taken, written consent of more than 3/4 of the shareholders. So 93% have given their consent and tribunal is also agreed. 18 holders who own 7% seek the reduction held by. So here the approval tribunal will order the redemption forthwith of the shares held by dissenting. So the dissenting shareholders, 18 holders who want their redemption to be happen immediately. So tribunal will order that redemption of these 7% of the value of shares shall happen immediately. And here is your line of CRR. CRR shall be used only for paying the fully paid bonus shares. Important mark kar lena. Many a time it can come that they can be used for paying anything. They can be used should only for the fully paid bonus shares. And when are we creating CRR? Suppose there is a company, it has redeemed the preference shares out of the proceeds of fresh issue or we have proceed or the profits. So CRR is created when the company is redeeming the preference shares out of the fresh issue. True or false? What is the correct answer? False is the correct answer. Very good. Because CRR is only created when the preference shares are redeemed out of the profits. Good. Transfer and transmission of securities. Section 56. We still have time. We can proceed. to section number 56. This is the last section that we're going to take up in today's class, and then we wind up. So, and then is your time for doubts. Anyone still wants to ask doubts, can ask their doubts. If you have any doubts in the redemption of preference shares. No doubts, then that's excellent. So what is the meaning of transfer of shares? Transfer of shares means you are transferring. There are two parties. Number one, transferor. Number two, transferee. Even on the portal, I cannot see any doubt. So that means everything is clear. Great. So transferor and transferee are two parties. When you're transferring the securities, one person is giving shares to another. So say, for example, A decides to give the shareholder, decides to give the shares to B. So A is the transferor, B is the transfer. What has to be executed for such kind of transfer? Transfer deed has to be made, which will specify the name, address, and occupation of transferee. Transferor to company already knows Mr. A. He's the shareholder of the company. He is deciding to transfer his shares to another person, that's Mr. B. Swati, because this is the amount which is mentioned over there as per the Act. Okay, so that you have to go as per the provisions of the Act. It is clearly mentioned that the amount equal to the nominal value of the shares. For maintenance of the CRR, you have. All right. So whatever the limits have been given, they have been set up by the Companies Act. You cannot cross question on that why such limits have been set. Okay. Okay. So the name, address, and occupation of the transferee has to be specified because A is already known to the company. He is the shareholder of the company, and B is the person to whom you are transferring the shares. So his name, address, occupation, everything has to be informed. Transfer deed will be made in the prescribed form as per the rules told that SH4 will be used in case the shares are held in physical form. Demat form, then you have to follow that dematerialization. But if the shares are held in physical form, SH4 form will be used for this transfer deed document. Now, the instrument shall be delivered to the company along with the certificate within 60 days from the date of execution. So within how many days, children, you have to make this certificate letting the shares will reach, the instrument shall be given to the company in 60 days from the date of execution. And if the share certificate is not in existence, in the letter of securities allotment shall be filed. So if share certificate is there, 60 days it has to be filed that the certificate has been transferred, and otherwise you have to file the letter of allotment. Where the transfer is between persons whose name was entered in the beneficial owner, then above provision will not apply. So if it is happening in the demat form, your names and the records depository. So earlier A was the beneficial owner, now B is the beneficial owner. Then this provision of physical shares is not applicable. Now what happened? This instrument of transfer is lost, or it has been delivered to the company within 60 days. If the instrument has been lost or not delivered, so A transferred the shares to B, and this transfer deed that the instrument that they have made, it got lost or it failed to deliver it to the company in 60 days. Then the company can request for the indemnity. Company will say that you have to indemnify me for this kind of loss. The transfer will be made on the basis of indemnity as the board may think fit. It says company will say that you have to sign an indemnity where the company will, then only the company will record this transfer that you have made. Okay, so where the application is made by the transferor alone and it's related to partly paid up shares, then what happened? So there's Mr. A who is transferring the shares to Mr. B. The share value was rupees 10, but Mr. A has only paid up rupees 8 per share. So how much amount is pending? Rupees 2 per share is pending. So can we say it is partly paid up shares? Yes, ma'am, it is a partly paid up share. Now you're giving a partly paid up share of rupees 8 to Mr. B. So don't you think B will have to pay this rupees 2 now? So B has to be very careful to see whether are the shares fully paid up or partly paid up. Now what happens? Now A has transferred the share and this relates to partly paid up shares. Now company will not register this unless company will send a notice to Mr. B that listen, are you okay? No objection has to be taken here. Company will say, okay, are you okay to pay rupees 2 because rupees 2 per share is still pending to be paid to me. So this Mr. A who is transferring the shares to you, he has not paid it. Are you willing to pay it? So Mr. B will have to send the no objection within 2 weeks from the date of receipt of such notice. So then only this will become a proper allotment transfer deed will occur, because if I have transferred the document to you, then you have a notice has been sent to the Mr. B that are you okay to pay, because company wants to be clear that my balance rupees 2 will be coming or not. So no objection certificate has to be taken from the transferee that he does not mind even if the shares are part. However, in case of the shares or transfer held by the nominees of government company, full exemption has been given. So government company has full exemptions for transferring of securities. They don't have to follow these kind of conditions. Partial exemption is given only in case of the bonds issued by the government company. So where the bonds are being issued, there the letter of allotment and other things can be used. But in case of securities by the government, full exemption has been given. Is that clear? Physical transfer of shares. In case of demat, you're using the word depository. Beneficial owner's name has to be there. Everything is clear. So 60 days provision is important over here, and no objection certificate has to be taken in case of partly deductions. The only history, geography, and whole things come into picture when you talk about transmission. I hope transfer is crystal clear to everyone. Good. I'm glad those who have written clear. So very nice. Now let's move to the word transmission. Transmission means something which is happening by way of operation of law. So transfer is your voluntary transfer, delivery of goods. जैसे होता है voluntary transfer. You're transferring your share certificate from one person to another, and you have to follow the entire procedure given in section 56. Transmission is also governed by section 56 only. But transmission, how does it happen? Mr. A is a shareholder. He died. His legal representative, his son, will now get the share certificate. Or in case of succession, or by death, or by inheritance, bankruptcy has happened, by marriage it can happen, all other kind of things, or by leniency means you have become mentally sick, then the court will decide who will be holding your shares. Or in case of you have become insolvent, then your official assignee is appointed, whoever will be appointed, will be holding your shares. So transmission means devolution of title to securities, otherwise than by transfer. You're not transferring the securities to anyone else, but transmission is happening by way of law. And on registering the transmission of securities, the person entitled to transmission becomes the holder and will get all the rights and liabilities. So I am Mr. A is the shareholder. Now when he died, his son will become the shareholder. Now he will get all the rights subject to the liabilities arising from that transmission. While the transfer of shares is happening by the delivery of proper instrument duly stamped, transmission is done by forwarding necessary documents. A notarized copy of the death certificate has to be given. How will you prove to the company? You have to intimate. Transmission has to be, transfer was being intimated by using the proper instrument of transfer, that is transfer deed. How will you intimate transmission? The person has gone up, he has died. He will not come and tell that company, listen, I have transferred. In case of transfer, Mr. A was going and telling company, look, earlier my name was there in the register of members. Now I have transferred my shares to Mr. B. Please include his name in the register of members, remove mine. But in case of transmission, that person cannot come. That person is gone. His son is now. So you have to intimate the company. You have to take the notarized copy of the death certificate that this person is no longer there. I am the legal here. The share certificate shall be given. Time period for the delivery of certificates is something that we're going to take from the study material because it's a little huge and vast. So I don't want to miss out anything. So that's why, and it is very elaboratively given. So we just go through it. First, let's see example number 12. Himanshu has received a notice from Chaitanya Progress Books intimating that Shefali has submitted a transfer deed duly signed held for the transfer of 500 partly paid up shares. 6 out of 10 has been paid. So what will happen? What will Himanshu has to go? He will have to give a no objection certificate latest by 21st August. 2 weeks time period is given. He has to submit the no objection certificate. Mark it important because this only helps you to clarify your above concept. So these are the cases in case of death, insolvency, and leniency. The person becomes lunatic. His share has to be given to the person administered by the court. Let's understand transfer of security of deceased person. Subsection bring ease to the legal heir. So legal heir will get all the shares and securities of the deceased person. Richard Daniel, after having obtained the succession certificate, succeeded to 7,000 equity shares allotted to her father. So father died, 7,000 shares were given to him as a transfer. To pay off the debt, she wants to transfer whole of the 7,000 on the basis of, now she's planning to transfer the shares, 7,000 shares on the basis of duly stamped. The documents were delivered for the transfer. Company on receiving the transfer document along with the request should they transfer the shares. Now the shares are being further transferred. Even though she is a legal heir, is not a holder as per the register of members, transfer made in favor is valid transfer as if she has been holding. Now what will happen? The shares have been given to him as a transmission. The law simply says that you have to intimate that transmission. The document has to be proved to the company that this person has now died. Now I've got shares. Then only you can further make the transfer of the shares. As an alternative, she can choose to get herself registered. She will make an application. Such application along with the share certificates will go. There is no need to submit the transfer deed in case of transmission because transfer deed cannot be signed by the deceased person. So you simply have to intimate on the basis of succession certificate, death certificate of the person can be shown. You cannot have any transfer. Company will check and will proceed and enter the name of this. Now, the company name of the deceased person will be removed. Further new shares will be issued and then things will go forward like this. Now, what is the time period is the whole story about this section of transmission. In case the person is subscriber to the memorandum, then within 2 months of the date of incorporation, you should now a time period for delivering the certificate. By when the time period shall be delivered, you can simply give it a reading. If you are a subscriber to memorandum, then 2 months. If you have allotted the shares, then 2 months of the allotment. In case transfer is happening, 1 month. In case of transmission, 1 month. Allotment of debentures, 6 months time period has been given, and for all the IFSC, 60 days time period has been given. With the securities that are dealt in the depository and company intimate the details of securities immediately about the depository. When you are dealing in DMAT form, then depositories have to be formed. A request for transfer has been received by this informed SH4 for transfer. The company shall deliver the certificate by 24th December. So 1 month time period it has to. Is that clear? So this liability is also very, very easy. Any default which has been made, 50,000 penalty is liable. All right. So what is important in this case is that you have to remember that the certificate has to be delivered. There is that 60 days and 90 days. We have listed out something. Okay, we have not yet covered about that refusal of registration and refund. We can try to cover since we still have time. So in case of dematerialization becomes necessary, unlisted public companies, all you know, Rule 99A, DMAT form, then you have to follow same things. And 447 penalty has already been given under that, so you can follow that. For liability of depository, also children, 447 penalty will become applicable. Means you have shares have been transmitted and the name has not been entered, 447 will become applicable. I think we still have time. We can proceed to section 57. But before that, anyone wants to ask any doubts? Anyone having any doubts? You can raise your hands also if you want to ask any doubts. Otherwise, let's proceed further. And in the next revision section, I am planning to bring certain questions also for all of you. Today, we have done certain MCQs along with that. All right, so let's move forward. Punishment for personation of shareholders. What is the meaning of personation? Personation means transfer deed, lost, point against. Okay, Abhishek saying, okay, I will take this point up this section now. Section 57, deceitfully personation means you are trying to create in a fictitious names you are using. You are actually not the owner of the security and you have tried to cheat upon another person. You are becoming the owner of any security or taking any interest in the company or as an issuer of warrant. Then any person who tries to obtain these kind of things or receive any money from the company, then there is a penalty under section 57. Personation of shareholder means you're trying to use the fictitious name, fake representation you're trying to make. Then what is the penalty? Minimum 1 year to maximum 3 years and 1 lakh to 5 lakh fine will be given. So it is simply trying to tell you that if you do any personation, say for example, I'm Harleen Kaur, but I take as a fictitious name, I'm trying to become the owner of securities by name of say Rishabh Gupta. So actually my name is something else and I'm now deceitfully personalized the securities. I'm becoming the owner of securities by doing the personation. Then I will be charged with a penalty of 1 year to 3 years of imprisonment maximum and fine of 1 to 5 lakhs will be given to me at section 57. Now, refusal to register and apply for refusal of the shares. Now, this is something which is very, very important. Now, A, transfer the shares to B. Now, what will happen? The company has to register this kind of transfer. If it is a private company, you have to send the and refuses to deliver. Say, company says that, okay, I have a doubt on Mr. B. I'm not going to enter his name in the register of companies. Then what will that Mr. B do? Mr. B will have to go and file an appeal within 30 days. I'll explain you the time period. So within 30 days and 60 days time period has to be seen. So this is what we are going to take in detail from the study material. But before that, there is a doubt which the student has raised in a particular point. Let me clarify that. Yes, Abhishek, what are you asking? Transfer deed point, which is lost. Okay, so where your transfer deed is lost and you're not able, then the no objection certificate we have already done in case of transfer deed. Let me take you to the same point. So here's your transfer deed. In case of depository, you have to include the name and the beneficial owner and other transfer deeds things we have done. So if the instrument has been delivered or has not been delivered or become lost, then with 60 time periods, company will register on the basis of indemnity, means the company will get the signed indemnity bond has to be signed that, okay, fine, we have agreed. Then only the board will take the signatures and sign an indemnity, then only the transfer date will be made. Why, child? Because you are the beneficial owner, you are the main shareholder. And now you, as per your choice, you're transferring your securities to someone else. How will the company come to know? We need certain proof, we need certain evidence, we need a document. So if your share has been, if your transfer deed has been lost or it has not been delivered, you have to deliver it to the company within a certain time period. Within 60 days, it has to be delivered. Now you have not delivered it. And you went to the company and you said that, please, why haven't you entered the name of my transferred person, that is Mr. B. So the company will say that you have not given me any document for, on the basis of which I will make this transfer. So you will have to sign the indemnity. Company will register the transfer on the basis of indemnity bond signed as the board will think fit. Then only this transfer will take place for. Is that clear, children? Now quickly tell me, you want me to take up section 58 also? Personation is also offense minded. 447 is a general provision. Any kind of fraud you're doing, 447 will become applicable. So that is clear. What is the meaning of forced transfer? I think this is part of your 57 also. Forced transfer is basically a nullity, means not legal binding. Say, for example, anybody who has forged the signatures, have given the fake signatures, it will not make the transfer possible. No ownership will be acquired at the same time because the real owner will remain the same owner. All right. All right, students. So we are left with a very less time. I don't want to rush through section 58. I want to do it in detail with all of you because section 58 is something which has to be very elaborative, 30 days, 60 days, and the whole the story of the 60 days and 90 days keep coming up repetitively. So I would want you to make small notes along with that. Any doubts if you have, you can ask in section 57 that we have done. Because in the next session, we will be finishing off with your debentures also. Thank you, Ayushi. I'm glad, no doubts. That means everything is clear. Thank you, Krishnam. I'm glad you liked the session. He's written, thank you for the conception session. Thank you so much. Good. So I'm glad you all have enjoyed the session. Thank you, Kushbu. And again, my thank you, Swapi. My humble request to all of you is that keep revising, keep doing it nicely. And in the next class, we're going to wind up the lectures also. Yes, Abhishek saying that section also talks about personation against the fictitious name. So here they have specifically addressed about its penalty when you're using the personation in case of shareholders. Yes, that 14 and 15, 45 days, let me get it checked and verified why the 15 days provision is there. As of now, you can go with the 45 days provision that I have told you and explained to you in 3 steps. All right. Thank you, Dharmik. Okay. All right. So now I can just see wonderful thank you messages from all of you. So thanks a lot, children. See you all on Sunday. I think it's Friday today. So Sunday we'll be meeting. Thank you, Abhishek Singh. He's saying it was a wonderful session. Thank you, Manish. Thank you, children. God bless you all. And keep revising what we have done today. And in the next session, we'll try to finish it. And also we'll try to see if we can do certain questions from the question. Okay. All right. Thank you, children. Yes, sir, it's over and students don't have any doubt. They're just thank you messages.